Hi everyone, Melinda Jennison's my name. I'm the Managing Director here at Streamline Property Buyers in Brisbane. Today I'm just going to prepare this quick video to help you understand what's really happening on the ground across Brisbane. And I've got some real examples of properties that are selling, properties that are not selling, as well as some information around what that might be caused from. Yes, we're in a rising interest rate environment. You can't miss that given the news headlines at the moment, but not all property is performing and moving in the same way. Let's start with dwelling values across Brisbane as an example. Most of the median headlines are focused on reporting on dwelling values. Now in Brisbane, the majority of dwellings are made up of the housing market, and it's a much smaller component that are made up of units and townhouses. Now, those two segments of the market are doing something slightly different in Brisbane at the moment. So what we're seeing is the housing market has definitely flatlined, and yet the unit market is still growing in value. I'm going to share my screen with you just to show you what information we have around this. Now, this is the median value for houses and units tracked according to CoreLogic data since January 2020. Now, the blue lines here, this is the monthly change in the median value for units, and the black line is the monthly change in unit values for houses. So you can see right back since September 2020, every single month, the housing market in Brisbane has been in positive growth territory. Data up to the end of June, according to CoreLogic, confirms that for the first month, we had no price growth. Housing values remain unchanged, and this is median value, so it is to some extent reflected by what is actually selling, and that comes down to understanding the composition of properties. However, what sold in June did not change in terms of the median selling price compared to what we saw sell in May. In the unit market, however, you can see housing consistently outperformed units up to May this year. And in May this year, we started to see the growth in the unit and townhouse sector outpaced the growth in the housing sector. Now, this is also something that we observed in June. So in the June month, house prices did not change, whereas the unit price value increased by 0.8%. Now, what we've been reporting since January is that we've seen a shift in the on-the-ground demand away from housing towards units and townhouses, and that's potentially because of affordability constraints. Now, you'll remember the housing market in Brisbane has had huge growth in the last 12 months. Some areas have had growth in excess of 40% over a 12-month period. So a lot of people are being priced out of that product type. So to stay in more desirable locations, they're looking at compromising on the property type, and they're looking at townhouses and or units to stay in the same locations and to stay within their budget. And we're starting to see this now reflected in price changes within the data. That said, when we're looking at median value changes for all dwellings, the CoreLogic data shows a price shift of 0.1% across the month of June. So you can see it's about understanding what that data is made up of and the contribution between houses and units. That's important to understand if you're purchasing in Brisbane, so you can understand the direction of the market. Now, I also want to say that different types of properties are in demand in different ways right now in Brisbane. Yes, we're in a transitioning market, and I want to give you some examples of properties that have sold just in the last couple of weeks to help you understand a cross-section of what we are seeing on the ground throughout our city. The first property on the screen is a 3-bedroom, 2-bathroom property with double lock-up garage and a 405 square metre block of land in Indooroopilly. This property went to auction just last weekend, or 2 weekends ago, I beg your pardon. Now, this sold with 13 registered bidders, and the purchase price was $1,455,000. Now, that was actually above the appraisal range that we had set for this property. So it just comes to show that the demand on a specific property can still push a price to a point that is above the expectations. And this was above the expectations also of the selling agent through conversations that we'd had with him. So a really good result for the seller. And we know by being at this auction that there were multiple registered bidders who were active up to around the $1.35 million price point. Then for the last 100,000, 3 active bidders took it in almost $1,000 increments all the way up to $1,455,000. That's an example of when you've got high demand on one property, how the price can still escalate despite broader market conditions. This is a property that just sold on Saturday last weekend. Again, there were 5 to 6 registered bidders at this property. Price point quite similar to the Indooroopilly property, and that is it sold at $1,480,000. It was a 3-bedroom, 1-bathroom property in Ashgrove on 688 square metres. So again, similar price point, family home, fantastic suburb, only 5 kilometres in towards the CBD. Now, it's not all relative to location either, because here's another property that passed in at auction in the same suburb in Ashgrove just on the weekend. Now, this property had 2 registered bidders according to the information shared with me at the auction by the agent. However, only one of those bidders actually put forward a bid at the auction. This is an example where being at the auction helps you understand what's happening on the ground, and our team are out across Brisbane to understand not just what a property passes in for, but whether that property has passed in with a vendor bid or an auction bid, an auctioneer's bid, or whether that was in fact a market bid. Now, here's an example where the opening bid was actually a vendor's bid at $2 million. There was a $50,000 bid by one of the registered bidders. Then there was another vendor bid at $1,150,000, and the property passed in, $2,150,000. The property passed in at $2,395,000 with an auctioneer's bid. So the next competitive bid from the market was $2,050,000. Sorry if I got my ones and twos mixed up there, but this gives you an understanding of what we're seeing on the ground versus what might be reported as the passed in price when you're looking at auction reports and things like that. Really important to understand what the buyer demand is for certain product types in certain areas throughout the city. Now, I've mentioned that we've seen a shift in the demand towards townhouses and units. Here's a couple of properties as examples that have sold just in the last couple of weeks. This property at Coorparoo Townhouse, only a 2-bedroom, 2-bathroom property with single car garage. Now, this property was listed, it received multiple offers, and the property actually sold around the $660,000 mark. So it's an example of, this is after the first inspection on a Saturday, offers closed on the Tuesday, and as I mentioned, multiple bidders. So there were a huge volume of buyers through this property as well, and it's an example of where we're starting to see the market the demand shift to. Final example, and this is a unit. So this is a unit that is at Ascot, short distance to Racecourse Road. This was just listed Friday last week. First open home on the Saturday, sold Saturday afternoon. There would have been more than 30 groups through this property, 4 offers on the property, and this sold around the $600,000 mark as well. So you can see how some properties are still in high demand and other properties may not be selling. And there's different reasons for that. And it's about understanding what people are looking for in the current market. Another thing that I will say is that in Brisbane, rents are on the increase. We're at a period where we've got record low vacancy rates, 0.6% citywide vacancy, according to SQM research information. However, in some suburbs, we're seeing vacancy rates as low as 0.1%. Now, we've seen evidence in our clients' purchases where we've obtained rental appraisals that might show that the property should rent in a given range. And then when the property is settled and advertised, they're achieving $50, $70, even up to $100 per week more, simply because of the demand from tenants. So there is strong upward pressure on rents when you are targeting areas that have really low vacancy rates, providing you're buying in a location where those tenants can afford to pay more rent. And that comes down to understanding the demographic of where you're actually purchasing, especially if it is an investment purchase. In the unit market over the last 12 months, we've seen 8.8% median price growth in the rents that have been achieved. So that's lagging a bit behind the house price growth. However, we're starting to see some strong upward pressure on rents in that unit sector as well. Demand for different product types is something that we also track at a suburb level. This is based on the number of views per property on realestate.com, and we can overlay that data with what we're actually seeing on the ground as a team when we're inspecting properties throughout the city. What the data is showing us, as I've explained in some of those examples that I've shared with you, is that it's different product types in different areas that are in demand. And it comes down to understanding local markets, understanding what buyers are looking for so that you can understand what product type is most wanted and what product type people are not looking for. We're definitely seeing evidence of some properties sitting on the market without even getting buyers through the door. That is happening, and B and C grade assets are definitely not selling right now. And in fact, we're starting to see some properties being pulled from the market, especially if they can't achieve the price that they're looking to achieve. So in summary, what I'd like to say is local knowledge matters right now. If you're wanting an understanding of what's happening across Brisbane, it's important that you get out on the ground and you monitor real-time demand for different product types in different areas. The other thing I'll mention is that the fact that there's a lot of uncertainty in the market driven by that mass media message of, interest rates are rising, property prices are crashing. I've proven through the information that I've shared that that's not necessarily the case whatsoever. You have to be really careful of relying on mass media because there's a lot of fear mongering there. It's important to understand what's actually happening, and as a buyer, making an assessment as to what the risk associated with buying now versus waiting might be, because not all properties are going to do the same thing in the months ahead. And it's important that you understand and make an informed decision about what you think is best for you. Remember, Brisbane's still an Olympic city. We've got a huge amount of infrastructure underway. We've got record jobs growth in Queensland. We've got strong interstate migration. We're still an affordable city. Actually, now's a great buying opportunity for people that are wanting to get into the market, because there's a lot of buyers that are fearful, and therefore competition is actually not as strong as it has been for so many months. So if you are looking to buy in Brisbane, I don't think actually that there's a better time than now, because quality assets have less competition. And if you're going to buy an asset in real estate, you're not buying for 3 months time or 5 or 6 months time. In fact, you're buying for 20 years time. It's a long-term asset class, and I think there's going to be some good buying opportunities. While people are nervous and they're sitting on the sidelines, there's an opportunity potentially to buy with less competition. I hope that's been a helpful update on what we are seeing here in Brisbane on the ground. If you've got any questions, please reach out. Thank you so much for your time. Bye for now.